Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media like we normally do. It's going to be related to three different topics: commodities, wealth building, and or financial topics. I'll interject my financial opinions as we go, as I always do. And let's see what people are talking about and what charts people are sharing. If you want to follow me, it's at @finance on Twitter. Or X, I should say. And if you want to join our community, finding-value.com, that is where I go and dive into sectors, companies, a lot of training on the way that I view investments and how I put on these positions in portfolio position sizing, et cetera, et cetera, et cetera. So coming on down, we've got Adrian Day here. I don't really know who he is, but let's just talk about some of these YouTube heads. I know he's a YouTube guy. It says Adrian Day sold uranium in October of 2023. Admittedly, too early. He'll be looking to get back into the physical and Camco on any price pullbacks, he said. With this current pullback, are we going to see more people in this situation? I honestly, guys, I don't know why you would sell out. I don't understand it. Like, are you trying to trade this thing in the short term? I've been riding it since 2020. I have been deathly afraid to try to sell out and time it on a pullback. What if the pullback never occurs? Are you just going to be out of the uranium trade? What are you going to do if it goes up? Are you going to buy at a higher price than where you sold? Now, you have to also think of the tax ramifications and how far back it actually has to pull for you to buy it and then also cover your tax obligations. I mean, I'll just say this. It seems like the smaller traders, the ones who maybe don't have as much invested, they don't really think about taxes as often. And maybe that's because they just don't have the gains. I don't know. But I mean, you're going to have a 30, a 20, 30, 40% pullback depending on when you purchase the stock and then actually making money, selling it, paying taxes, and then having it go down and rebuying it. I just, I'm not willing to let go of my position no matter what if the uranium bull market is still in a bull market. The price is going to move up, the price is going to move down, even when you're in the bull market. The question is, how can you keep the position on, and how do you tell that you're still in a bull market? And the way that you tell that you're still in a bull market is inventory, the physical futures price, and the demand being met by supply. If we have a deficit and the inventories continue to draw, we're going to see continued price increases in uranium. I'm just going to stay long, guys. It's that simple. And if we get a large pullback, maybe I'll buy more, but that's my viewpoint. It makes my life very simple, and I don't have to be asking myself every single day, should I sell? Should I buy back? It's just the strategy's already there. Here's oil. It says at some point this won't last. This is global oil inventories and oil on water in million barrels. So here we are way down here in 2024. It is below 2020, 2021, 2022, and 2023. And during these time frames, we had oil go up to 120, $130 a barrel. So how the heck are we down here and have the price only be low 70s? That is a good question. Sentiment is obviously really bad right now. And I can't believe that we're down here price wise with global inventories where they're at the same time that we have all this geopolitical tension. This is an absolute steal, an absolute steal. And being able to recognize when the opportunities are, and even in the face of the price going down, You should be saying, this doesn't make any sense. It doesn't make any sense. And it doesn't. I think that's an opportunity. I think there's a value disconnect in oil right now. Does that mean that it can't go down further? It could definitely go down further, but there's a huge value disconnect. It says read Mises. So this is Ludwig von Mises, however you say it. It says there's no means of avoiding the final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as the result of a voluntary abandonment of further credit expansion or later as a final and total catastrophe of the currency system involved. We had a very large credit expansion, which was a bubble in 2006, 7, 8. All those loans was credit expansion. They saved the quote system or saved the banks by printing a bunch more credit. And then what comes next is the catastrophe of the currency system involved eventually, whenever that occurs. That is coming at some point. Currency system under stress at some point. Lobo says, striking that this is from UBS, not Shift Gold. Says also striking to see that CNBC, but not surprising after JP Morgan called for $2,300 gold. And no, this doesn't mean gold is topped. This cycle is just getting going, in his opinion. Gold prices to hit 2,200 and a dramatic outperformance awaits silver in 2024, says UBS. We've seen enough charts. I show you guys charts all the time of silver squeezing up, gold basically sitting at its all-time highs almost, and it's just basing out, kind of moving sideways right underneath it. Yeah, we could easily rip. Easily, and I'm positioned for that. It doesn't mean that I put all my money in it. I'm positioned 100% for it. The symmetry in a lot of these different sectors are so large. What I do is I spread it out and I capture, the 6, 7, 8 best ideas out there. Silver is a very good idea. Same with platinum. Both of those are great ideas, and I have money allocated to it. I think oil and the sentiment in oil is absolutely blown out. I think that's a good one. Uranium. Uranium looks fantastic. I've got, money spread out amongst what I think are probably the 6 or 7 best ideas in the market with the best valuations, and for those valuations to inflect more positive as time goes on. Some people will say, well, why are you here? Platinum hasn't gone up for 10 years or 12 years or 14 years. Well, guys, it's just one of my holdings. I can carry the portfolio with only a sector or two pulling to the upside dramatically, and I could still get huge returns. I don't need everything to go up all at the same time. It would be great if it did, but that's not the game I'm playing. The game I'm playing is, that the symmetry is going to carry me up. And the symmetry means that if I get a 10x in one sector, and a lot of that sector 10x's, that's where I make all the money. So I can turn 10% or 20% of a portfolio, and it could be larger than my entire portfolio is when I put it in originally. So 10 times 10% of a portfolio is my entire portfolio size. So it'll carry your returns higher. Yeah. It says, by my work, this is all just the amuse Bosch before the real rug pull in stocks. Just to wet the beak a little, I'd get comfortable. This could take a while. US dollar index, and then you can see the all country world index. And you can see that when the dollar falls, we get a move up in the all country world index. So basically, when the dollar goes up, the all country world index will probably go down. We're seeing some pretty strong moves in the dollar, the DXY, which is the dollar index. We're also seeing strong moves in yields, and they look like they could continue to the upside. And conversely, all country world index will probably fall. So here's Sahara. It says hit the first target and now stretching for the next. This is UX1, the uranium futures pricing. Here's your bowl. We've broken out of that bull and we're moving on up. Where is it going to go? I think it's going to go. I think it's going to go a long way up. Some people will say, "Oh, it's over the break-even point of your cost curve for all the miners to turn on." The question is, well, how much is going to come on, and what demand is there? If the demand cannot be satisfied in the time frame that the mines can bring on the uranium, then the price will continue higher until it can, or until demand gets destroyed. But apparently, with a lot of these utilities, they're not going to destroy the demand. They'll just keep going up the price. Sentiment stinks. Investors are exhausted. Momentum is so bad. It is literally off the chart. And this is for oil. And it feels like every other sector is lapping us. Yet at $70 WTI, we estimate several mid caps to be trading at 15% free cash flow yields. Buybacks equal eventual apathy curative. And look where we're at. We're way over here, like off the chart in terms of improving, leading, weakening, and lagging. We are lagging and weakening at the same time. That's downward is lagging and weakening's over is the x-axis. So we're way off the chart, and you can see where we were over here in terms of sentiment. And this is the RS ratio, and this is your momentum on that side. Bad momentum, bad RS ratio. Caterpillar is a proxy for the global economy, then one would think it would be supportive for oil. Caterpillar is beating estimates, and the stock price is doing real well. So what's going on here with oil? And agree, I don't know why it's way over here. People think that their time frame preferences, which are always short, matter. Your preferences don't matter to the market. You have to position yourself to take advantage of the market when the market comes to you. And any expectation to the contrary is simply stupid. I thought that was incredibly funny. Yeah, you can't do anything. The market's going to do what it's going to do, and basically you just ride whenever it's ready to go. Doesn't matter what your opinions are of the market, what your preferences are, what your time, it doesn't matter. Doesn't matter. AMC shares are now down 99.3% from their peak during the 2021 meme stock mania, another all-time low. So I know we had GameStop and AMC and these meme stocks. I know some people who actually went into AMC Entertainment at work, and I was like, "What are you doing? Like, you're just going to lose a bunch of money." And they're like, "Oh, I can't sell now. I'm going to wait for it to go back." I'm like, "Good luck with that. It's just going to continue to go down. I don't know what you're waiting for, but whatever." In case you missed it, here's what Porter Collins shared about uranium as his highest conviction trade for 2024. So his highest conviction trade for 2024, uranium. Coming down, trucking spot rates have thawed, up 0.23 cents per mile, or 15% since November. This is unusual and a great sign for continued recovery in the trucking market. And usually you want to pay attention to this because this is usually what front runs the economy is trucking rates and freight rates and stuff like that. So it's improving. It looks good. Says, I mean, kind of hard to miss a classic bullish falling wedge into the 200-day moving average. Maybe he should follow Scott or Andy, who are screaming about a slingshot bounce there for the majority of the northern hemisphere spring summer. I'm not saying that I get everything right, that my calls are all right. I've gotten some pretty bad calls in terms of some of the stocks that I tried to play in the markets. I've had some really, really good calls. So, I've been down 30, 40, 50% in some of my calls. I've been up over 20x in some of my better calls. The symmetry is what carries the portfolio. And we can look at some of these technical analysis patterns to give us a slight advantage. The reason that Scott and I we're so bullish on uranium is because of the market conditions and the setup of the fundamentals in the inventory of uranium. And that's what we continue to look at and why we continue to hold. And I know I might be talking for Scott a little bit, but um, as long as we're bullish, stay bullish. You don't you don't want to be bearish when all of the fundamental conditions are bullish. And this could last for some years, guys. This isn't I don't think this is going to last for like a month. I think it's going to last for multiple years before the inventory really gets resolved. So I'm going to stay bullish. I don't see any reason to be bearish at this time or to sell out. But again, that's not financial advice. That's just me and what I'm doing. The S&P 500 index weight by sector. The US is the world's top oil producer, but energy is a fraction of its main stock index. So the S&P 500 index weight by sector. And here technology is the big one. And what I would be doing is I would be looking at the bottom ones. And I think this will rotate up over time based off of the market conditions. Now, the one thing that I'll say is the stimulus money coming into the system may have given us a false start in the commodity sector. It pushed us higher, yes. It basically pushed the ball and got it rolling. But we might still be very early, and we may still have to go through a technology bust before we get our big move in commodities. And I don't know what that will necessarily look like when this busts. It may bring down some of our stuff or have it go sideways for a little while, much like 2000, 2001. Or have we already gone through that area? What makes it tough is I call it the stimulus overhang. The stimulus overhang is you got all this money that came into the system. It was credit and money coming into the system, created a lot of inflation, put everything into a shortage, and now we've got the stimulus overhang. We still have a lot of fiscal spending, which is kind of buoying everything kind of higher. We're not to the supply shortage portion of the area yet. So we could still be pretty early. And maybe that hits really good in 2025. Could there be a slowdown or a sideways motion in 2024 before it? Yeah, definitely could. A lot of people, they think they can nail this stuff with the degree of accuracy of like 3 months or 6 months. I just don't think that degree of accuracy can be pinpointed that well. I think you want to get the general trend right. You want to hold on as long as the general trend is intact, and then you just ride it. And then if you get better buying opportunities, you take advantage and you buy more shares of whatever is down. I mean, that's kind of the strategy there. But right now, people are not in energy, they're not in real estate, they're not in materials, they're not in utilities. They will be at some point. Christine says, this is the best thesis for oil field services you'll ever see. The treadmill to replace reserves is speeding up. And this is art. U.S. production currently declines at 37% per year. And that's not just shale, but all wells. And the Red Queen effect is the U.S. oil production base declines at 37% per year of all these different wells that we've got. We need to be drilling like heck to replace our reserves and to produce. I think that we are going to get into a very tight situation very soon in oil. And I don't know if people really have a good understanding of what that could potentially do to the markets. Because if this declines and we can't get it back up, and I'm not saying that we can't, but I mean, maybe we can't. That means that we're in a world of energy scarcity. And if we're in a world of energy scarcity, and I think it's coming soon, within the next 10 years, that world looks completely different than the world we're in today. Completely different. I think we're transitioning into that world, and people are feeling like signs of it. They're feeling the inflationary pinch, that things are getting more expensive, that things are getting a little bit harder. to live, to afford. If we go into an energy scarce world, that's going to really, really speed up. It's going to be really tough. And I'm positioning my portfolio for that type of world, for more of an energy scarce world, more of a world where energy costs are a lot more expensive. And I'm going to profit from that. Not that I want that situation to come, but if it does come, I'm going to profit from it. And if it doesn't come and it's delayed, well, that's perfectly fine. I'll be fine because my living expenses are cheaper. Now here's an energy XLE. It says, you guys see those last three monthly candles in the energy index, just these small little guys? That generally comes before a big move, guys. Usually you get up to a resistance level. That's that resistance level in the gray. So you look at it, you had a turning point here that becomes a resistance level. You sell off dramatically down. You come back up and hit your head, then we sold off dramatically and into weakness of 2020. We've come on up, we hit our head, hit our head, hit our head, and now these small candles are just little selling pressure days. There's not much selling pressure there left. So I'm looking to see if we can get a break to the upside. If we break this, guys, oh my gosh, this is going to be a big move because you're literally breaking over a decade-long resistance line. And the longer this hits, more times you hit it, the stronger it becomes. And when you break through it, you're going to get a huge run. I think oil and a lot of the energy equities that are up against these resistance areas are probably some of the best investment opportunities that I've seen in a long time. And if we get into energy scarcity, that is where we're going to get a big, 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 big move. Chevron and Exxon's earnings show that the oil market is much tighter than people think. We've got here, are we sleepwalking into an energy crisis while investors rush into Mag 7 stocks? It says, the biggest draw of inventories of the last 8 years, down 111 million barrels since the end of last year and counting. Look at that move from the end of last year downward. Look at the drawdown in inventory, 111 million barrels. That is crazy. I can move that in just a little bit. Look at that. Look at that move down there. Here is world weekly inventories, including commodities on water. This is another sign of data here. Here's 2024 right there as we're coming down. It does look like we were tighter in some of the other years like 2018, 2017, and then 2019 as well. The average 401k balance in the US by age, 30,000 for 25 to 35, 76,000, 35 to 45, 142,000, 208,000, and 232,000 for 65 plus. Do these numbers surprise you? Yeah, they do. I think they're pretty low for people who are trying to go into retirement with $232,000 is the average 401k balance. And that's an average. There's some people that are skewing that probably to the upside. I say oil shortage by 2025, right around the corner. Let's read this. This is the Buffett-backed Occidental CEO says that there's an oil shortage by 2025. Warren Buffett-backed Occidental Petroleum is predicting an oil supply shortage by 2025 due to global failure to replace crude reserves at a fast enough pace. We're in a situation now where in a couple of years' time, we're going to be very short on supply, says Occidental CEO Vicky Hullo, noting that some 97% of the oil the world is currently producing is from discoveries made in the 20th century. Yet globally, less than 50% of that crude extracted in the last decade has been replaced. So we are basically producing a bunch of crude that we found a long time ago. And we haven't been replacing the reserves. So we're drawing down on our global reserve inventory. And she says or thinks that by 2025, we could potentially have some problems. Shortage. From the USA standpoint, wouldn't Canada be the uranium jurisdiction they would look at over, say, Namibia? Strictly from an ease of transportation and solid political relationship perspective. Like UEC already bought UEX, I'd assume this behavior continues. And let me see what this is exactly referring to. I was posted on this. So I'll give you my opinion on the uranium sector. I think that there's going to be a window of opportunity where there isn't much new production coming online. I think the price is going to spike and stay high. And anyone who can bring on production quickly can benefit from the very high prices. So, Canada, there's a lot of resistance to mining up there. There's also a lot of very technically difficult mines up there. Camco's got Cigar Lake. It's a very difficult mine. They have to freeze the water. It's underneath the sandstone. It's a pain in the butt to get at. I don't particularly like complicated production. So Namibia, it's not as high in terms of uranium concentration, but it's easy to mine. So what I prefer Namibia, and I think it's also in a neutral country that everyone is going to want to get pounds from. And if it's easy to produce from, and it probably has the least amount of, um, I'll say the least amount of resistance to go into production, I'm a big fan of Namibia. Uh, some people are going to say, oh, you have to ship it, and then there's going to be all these shipping things. Guys, I'm not even worried about the shipping. I'm more worried about who can get into production the fastest. Because there's this window of opportunity that you could capitalize on. If uranium's a few $100s a pound, then take advantage of it, produce, and just net that massive margin difference where the money goes straight to the bottom line. So I would say that Namibia is probably a better jurisdiction than Canada or America. And then you have to look at, well, how many pounds can some of these guys produce? There's not that many big producing mines, I don't think, that are located in America or even Canada at this point, outside of Camco. And I think Namibia is going to be where it's at, but that's me. I could be wrong. I still own companies in Canada. I own a bunch in Namibia. I own a bunch all over the place. I own some in America, but I think Namibia is going to be. I think that's the spot to be. That's just me. So that's where I'll end it there, guys. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. There's a discount in the description link below if you want to try it to sign up. Get yourself a discount. We've got a question and answer session. I believe it's coming up at 5 p.m. Sunday, and I'll make that update on the website here. So 5 p.m. Sunday, if you guys want to hit up the question and answer session, and you can ask me whatever you want, whatever you'd like. But that's what I've got for today. We'll hit you up next time. This is Finding Value.